Welcome back. Well, we have UltraTech's numbers that are flashing for you on the screen. On the top line, that appears it's a little bit lower than what we were working with, couple of percent points lower out there. But I think we had the EBITDA number as well. That should come up for you on the screen. The EBITDA number more or less in line, So I think it's around 1.5% to around 2% miss on the top line. That's further flown down to the EBITDA number. The street was a little bit cautious because they have a couple of assets now that have got consolidated within the entity. But for the time being, it appears it's not dragged profitability by a great deal. We'll have to wait to see further commentary in terms of what the management has to say on the path ahead, as well as how is their debt book looking. I think we have the commentary that's to the bottom of the screen. The volume number should come up for you. Just a minute, just trying to pull out that number. Consolidated sales volume during the quarter was around 41 million tons, which is a growth of close to around 17%. And excluding the acquired assets, the EBITDA per ton actually has come in at around 1,270 rupees per ton, because some of those assets that they've acquired, well, they'll still take time to come up to speed with regard to what UltraTech is doing. So a 17% growth actually is a good number. That's something that the street was working with. Volumes, no worries on that front. On the profitability, they're saying that the energy costs have come down by close to around 14% on a year-on-year basis because of the decrease in fuel cost, which was at around 881 rupees per ton in Q4. That compares with more than 1,000 rupees in the same quarter last year. Utilization levels were around 89%. So volumes have been fairly good. Utilization levels as well have been fairly good on that front. They're saying that the expansion schedule is moving as of plan. And as of the ongoing capacity expansion, they have commissioned close to 17.4 million tons or thereabouts. So I think we have most of those flashes. I'm just trying to look forward to the management commentary. All right, that's the commentary that's coming in now. Given the government's focus on infrastructure as well as housing projects, along with the increased rural as well as urban demand, they're looking at a sustainable volume growth of around 7 to around 8%. While the sector may see some short-term challenges, they continue to say that the long term looks pretty much in step. So just to sum these numbers up for you, close to 2% miss on the top line. That's flown down to the EBITDA, in absolute terms. But the management says that X of all these acquired assets, it's still holding at around 1,270 rupees per ton. And they've got the benefit of lower power and fuel cost in the past quarter. So these numbers go in as more or less in line with what the street was working with. And the management commentary as well is fairly optimistic on the way ahead. To help us out with a quick analysis, we have Jyoti Gupta of Nirmal Bang who joins us on the phone line. Hi, Jyoti. Good afternoon. Good to see you in. Tell us, what is your first take? These numbers appear pretty much in line with what we're working with.
Thank you, Nigel, for having me on the show. Yes, they are. Actually, I'd anticipated like a 7% YOY growth, and my Q&Q was slightly higher. And EBITDA was something like a 4,500, which I'd anticipated with 1,222 as EBITDA per ton. I think more or less some minor variation, but I think it was anticipated primarily because the plants in the north, which got a bit of an advantage from realization of almost like 160 to 180, I think more or less the numbers. And in fact, Q1 should be even better for the industry as well as UltraTech as well.
Okay, so you're satisfied with these numbers. What else will you be looking forward to in the con call that I believe has been postponed by an hour now? So you got a later evening, Jyoti. But what are the key aspects you're going to be looking forward to?
I would actually be looking at more at the expansion plans and moreover and on the realization per tons, the price increases, because that's the only thing. I mean, you don't have much benefits coming from cost going forward. And of course, the petcoke prices, which have increased in the fourth quarter, that reversal should happen in FY26. So which means the benefit of petcoke, which we got of 4 paisa in fourth quarter, that should reverse in the FY26. So obviously, should be some increase in cost as well from their side. So I look more in towards the pricing, how the price is going to look out, the market share, and overall how the volumes are going to pan out. Because FY25, we had more or less like 291 days. This year, we should have roughly like 321 days, unless we have more severe rains. So overall, the growth, volume growth should be 7% plus for this year. And therefore, a good year for the overall industry.
Okay, all right, Jyoti, we'll let you go at that. Thanks a lot for joining in and giving us all those details. One more detail that should come up for you on the screen. They've recommended a dividend of around 75 rupees and 50 paise, which is a fairly decent number, not a big mover for the stock, but some additional dividend is what they've given out. And the debt as of now has spiked up because of the acquisitions that they've done. and the capex that they're incurring as well. But remember, the company is throwing up a lot of cash. So we have seen in the past that the debt number is normally kept under control once these assets keep throwing up cash. So at the last reported number that I can see that they have filed, the consolidated number is around 17,667 crore rupees, which is sharply higher on a year-on-year basis. But, the street was bracing for a higher debt number as well. We'll have to watch out for the capex plan and the debt reduction plan for the remainder of this year as well. So that's about UltraTech for the time being. The stock is down close to around, I think, 1.5% or thereabouts. But the numbers more or less in line with a small miss, actually, on the top line. Well, let's